Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking metals. Copper futures rally day 3. Copper sitting at a 33-month high, or in other words, a 2 3/4 year high, whichever way you want to look at it. Based off of a few factors, base metals in general are rallying, but we'll talk about the main factor for copper, which is China's supply and China's demand. The rally coming based off of the idea that global growth is coming back. China had some pretty good numbers this week, as well as the end of last week, and they are the world's largest user of copper. So copper is said to have a PhD in economics because it's a huge part of the manufacturing sector. And with the government continuing to spend, China's demand is increasing, but also China's supply is actually going to be decreasing. They're a huge smelter of copper. And what happens with the smelting is the pollution. And China's on a big pollution reduction program right now. So they've actually talked about shutting one of their smelting plants down, if not multiples. So the demand is actually assumed to be coming in lower, and that is spiking copper. Although today, copper is pulling back a little bit after reaching new highs for the week. And again, 33-month highs. It has pulled back. It is still positive on the day. And I think it's capped mainly because the US dollar is strong, and the US dollar has an inverse relationship to all the metals, base metals, precious metals, and with the US dollar rallying, it's kind of putting a cap on the rally in copper and slowing it down. So if you see the US dollar continuing to rally, you might see a little bit of a pullback, but based on the fundamental data, at least what we have now, copper is probably still a buy. We usually get a pullback when we get to these extended levels, but again, the US dollar is part of that pullback, and copper's demand looks to be strong. This is Bob Iaccino talking copper futures from the CME Group trading floor in Chicago.